If you own a successful healthcare clinic, a home health agency, or an assisted living facility, you are always looking for ways to pull cash out of your corporation without triggering massive income taxes. What if I told you there is a 100% legal IRS loophole that allows your business to write you a massive check every single year? Your business gets a full tax deduction for it, and you do not have to report a single penny of it as taxable income on your personal return. It sounds illegal, but it's one of the most powerful tax codes in American history. It is called the Augusta Rule, and today I am going to show you exactly how the top 1% of healthcare owners use it to transfer wealth directly from their business to their family. I'm Larry Davis, EA, your healthcare CFO. After serving in the Marine Corps, I built Tax Help to protect the profits and build generational wealth for healthcare entrepreneurs just like you. Today, we are talking about IRS Section 280AG, better known as the Augusta Rule. I am going to break down the history of this massive loophole, the exact math on how it saves you thousands, and the strict documentation you need to survive an IRS audit. Let's start with where this came from. Decades ago, residents of Augusta, Georgia, wanted to rent out their personal homes to wealthy attendees of the annual Masters Golf Tournament. They lobbied Congress, and Congress created IRS Section 280AG. This tax code states that if you rent out your personal residence for 14 days or less during the calendar year, you are completely exempt from paying any income tax on that rental income. If you rent your house to a golf fan for 2 weeks and make $15,000, you do not even report it on your tax return. It is invisible to the IRS. But here's the absolute genius part for healthcare owners. The tax code does not say you have to rent it to strangers. You can legally rent your personal home to your own business. If you own an S-Corp or a C-Corp, your corporation is a separate legal entity from you. Your business can rent your house to host strategic planning sessions, annual board of directors meetings, staff training, or team building retreats. Here is how the math works. Let's say you need to hold a 2-day strategic planning retreat for your assisted living facilities management team. You look up the cost to rent conference space at a local luxury hotel, and they charge $1,000 a day. Instead of paying the hotel, your business rents your personal home for $1,000 a day. You do this for a total of 14 days throughout the year for various board meetings and trainings. Your business writes a $14,000 check to you personally. Your healthcare business just got a massive $14,000 tax deduction, lowering your corporate tax bill. And you just received $14,000 in pure tax-free cash into your personal bank account. But listen to me closely. This is a highly scrutinized loophole. If you do this wrong, the IRS will audit you and reclassify that money as a taxable dividend. Rule number 1, it must be a legitimate business meeting, not a party. You must take official corporate meeting minutes. Rule number 2, you must charge fair market value rent. You cannot charge $5,000 a day for a normal house. You need to get actual quotes from local hotels or event spaces and keep them in your file to prove the rent is reasonable. Rule number 3, you must issue a formal invoice from yourself to your business, and the business must actually write the check. The Augusta Rule is one of the most brilliant ways to move trapped cash out of your corporation and into your family's hands. But it requires precision bookkeeping and proactive tax strategy to execute safely. If your generic CPA has never mentioned the Augusta Rule to you, you are overpaying the IRS. Let my team at Tax Help implement these high-level wealth strategies for your healthcare business. Click the link in the description to book a free strategy call with me today. Let's maximize your tax code and protect your profit. Subscribe to the channel, hit the bell, and let's get to work.